Well, Tanzania's annual inflation rate slowed for the 9th straight month in September. That's due to a slow rise in food prices, a trend that is expected to continue now. Year-on-year inflation falling to 13.5%. That's from 14.9% for the month of August. Joining me now in studio for a breakdown on the figures, Riddell Marcus from Absa Capital. And of course, he's an Africa strategist at Absa Capital. Thank you so much for joining us. So, of course, we're also going to take a look at Mauritius and the outlook for that economy. But starting with the inflation figures, of course, it is positive when you see inflation coming down, that year-on-year figure, but 13.5% still means that, you know, consumers' disposable income is being eaten into. I mean, if we had 13.5% in South Africa, we'd certainly know about it.
That is right. The fact is, it's still growing by 13.5%. So prices from a year ago is still up 13.5%, and that is telling you that, you know, consumers remain under pressure. Purchasing power, like you rightly mentioned, is under pressure. But at the same time, you know, the trend is very positive. It came down from, like I said, 14.9%. It was close to 20% a few months ago. And we see it going even lower from here on. Particularly food prices is also slowing. It's still, you know, very, very high in around, I would say, around 15.5% as well on a year-on-year basis. But even that is coming down. And remember, food is about half the basket. So there's definitely some positive developments, but I do think there are some risks probably lurking that need to be taken into account.
Delve into those for us.
Well, first of all, I would say the currency remains a risk. With the global uncertainties as it is, you know, there is a bit of a chance that the currency could weaken further from here on. And then, of course, we've got high international oil prices, and those could, for example, rise even further. And then, of course, food prices too. So Tanzania, being a very import-intensive sort of country, are very exposed to these kind of risks. And that means that though we are expecting inflation to come down, even into single digits by next year, you know, the risk definitely remains.
And of course, you'd argue that at a point in time, when I'm talking about Tanzania will once again be producing its own energy. So these international oil prices will be less and less important, but we're certainly not at this point in time.
Very far from that point.
Yeah.
For now, the country is very much exposed to whatever happens in the international energy environment. So definitely an upside risk to be mindful of.
Let's shift focus to Mauritius. We saw unemployment rate there rising to 8.2%. When we're talking about job losses, where have job losses been most prevalent in that economy? And of course, all the indicators that we are seeing coming through, you know, aren't good at this point.
Yes, indeed. Before we even look at where job losses occurred, it's probably just you know, the right thing to step a little bit back and look at what's happening really in the economy. The economy is struggling. We've seen that even the central bank very recently during the MPC meeting revised the forecast for GDP growth lower from 3.8% to 3.3%. We certainly think there's a chance that it could even come in lower than that. What they did mention was the fact that there's a lot of sectors that continue to struggle, and I think it's across the board. Only two sectors that's actually doing well are the manufacturing sector and the transport sector, and they're not doing exceptionally well, but at least they're growing. So the job losses, I think, have been particularly across many of the sectors. Construction is one of them. So it is going to be very, very difficult for Mauritius to start to you know, increase employment again, given all the risks that the country is facing.
Talk to us about private investors and what they're doing with their money when it comes to the Mauritian economy and the attitude towards putting it into Mauritius right now. I suppose, as you say, economic forecast being downgraded. You've got inflation, which is expected to go to 5.5%, and then you've got the Mauritian repo rate sitting at 4.9%. So if you just look at those two, you've got negative real interest rates. Overall, how does that set the investment climate for investors?
Well, investors in this time, of course, in a country where growth continues to shift lower, will probably be a little bit uncertain. And the central bank governor mentioned the fact that there's a lot of or high indebtedness in various sectors, including tourism, construction sectors, etc. So in an environment where there's you know, high indebtedness, there's a lot of global uncertainty, there's a lot of issues in the local economy, investors will probably not be too keen to commit themselves.
Is this the sense that you're getting from any clients that Absa Capital works with?
There is a sense I'm getting from just even the authorities that, of course, is a very difficult climate now. So it's going to take a while. Of course, the economy is very dependent on what happens in Europe, for example. So, and of course, tourism is under pressure. So it will take a while for the economy to get out of this very difficult sort of momentum.
And of course, over-reliance on Europe right now. Thank you so much
Indeed.
for joining us. You're going to have to leave it there, Adele Marcus, Africa strategist from Absa Capital.